Welcome to Passport Software's presentation on our new Affordable Health Care Act management software. Starting in 2014, companies with 50 full-time employees or 50 full-time equivalent employees or more are required to begin reporting to the IRS in order to comply with the new ACA or Affordable Health Care Act laws. Unlike W-2s, this doesn't just involve filling out and sending forms in at the year end. There is a significant management aspect in order for these companies to comply. This includes month-to-month tracking of your employees, identifying who may have crossed the threshold and become a full-time employee, and offering those employees affordable health care in months when they are eligible for such offers. In addition, these offers must be recorded and tracked in order to comply. As you can start to see, this is a complicated process and it's going to be difficult to comply manually. Our Affordable Health Care Act management software will help you simplify management of these functions and enable you to more easily comply with the new regulations. It's fully integrated with our payroll solution, which helps eliminate duplicate entries and makes management a much simpler task. Let's join Adam and Paul and get an overview of this solution.
We want to talk to you about the Affordable Care Act and how the PBS ACA management software can give you the reporting and management tools you need. So, Paul, let's start with some ACA terminology.
All right.
Now, when we talk about affordability, all we're really saying is that the employee's share of self-only coverage is less than a certain percentage of their income. So for 2015, that's 9.5%. Full-time is anyone working at least 30 hours a week or 130 hours a month. A full-time equivalent, or FTE, is used only for the purposes of deciding who needs to comply with the ACA. So when you have a collection of part-time employees, the government says that for every 120 hours they work, that will count as one full-time employee, which leads us to the next term, an applicable large employer, or ALE. Now, if you have 50 or more full-time and full-time equivalents, you are defined as an ALE and are subject to the requirements of the Affordable Care Act. An aggregated ALE group member is one company among many, all of which share common ownership. So this company may have 10 employees, but as a group, there could be hundreds or even thousands, and collectively they're treated as one company with thousands of employees when it comes to the ACA. All right, safe harbors. These are IRS acceptable methods of determining an employee's income, and there are 3 of them. Now, when you're choosing one, bigger is better. The more money an employee makes, on paper at least, the more money they can afford for insurance. The most straightforward and what should be the most common method will be the employee's W-2 wages. The second safe harbor is the rate of pay, and you calculate that by taking their hourly rate, multiplying it by 130 hours a month, no matter how many hours they work, and then multiplying that by 12 months a year. And then the final method is the federal poverty level, or FPL, which is currently $11,770 a year, but this is likely to be adjusted each year. Now, this is your floor. The only time you would ever use this is if you have employees making less than $7.55 an hour. So now that we have some of the terminology to work with, let's take a look at the IRS forms you'll need to file as an ALE. And though there are huge differences, you can kind of equate these to the W-2 and W-3 tax forms. So Paul, he's already got the 1095-C up. So this form goes to both the employee and the IRS. Part 1 has basic employee and employer information. The boxes in Part 2 detail offers of coverage, the lowest cost of qualifying coverage, and an explanation of the type of coverage or a reason for no plan at all. Part 3 is only for self-insured companies, which we don't have to talk about today. All right, Paul, if you could bring up the 1094-C, please. Okay. Now, this is the employer transmittal summary. Part 1 is company information. Part 2 lists the number of 1095-Cs you've attached, whether the company is part of a common ownership group, and an area to claim transition relief. Part 3 summarizes coverage and employee information. And if you are part of a common ownership group, Part 4 is where you will list those other companies. Now, there's a couple of things that many people are missing when it comes to the ACA. A lot of people Google Obamacare and read about these forms and what they need to submit, or they hear about transition relief that says they don't have to pay penalties for 2015, and they don't pick up on the management aspect of things that they'll need to do during the year. So if you just wait till January, fill out your forms, and then discover that you have some employees that became full-time and you weren't aware of it, it's already too late. Then there's also the matter of reporting. First, if you are eligible for transition relief, you have to claim it on the 1094-C. The IRS doesn't just say, oh, they only have 80 employees, we won't worry about them. And secondly, though the shared responsibility penalties are getting phased in this year, the reporting penalties are in effect. So the IRS will be understanding of good faith efforts to be timely and accurate, but if you simply don't file at all, you can be fined up to $500 per form. So in the case of the 1095-C, that has one copy for the employee and one to the government, that can be $1,000 per employee right there. All right, and now let's go to a PBS demo. Paul, if you could run the monthly labor summary report, please. Okay, as part of the year-end update to payroll, which is in final testing right now, we have a new report called the monthly labor summary. And though this is outside of our ACA management software and doesn't have all the bells and whistles to account for exempt employees and such, it will tell you how many hours employees are working each month, as Paul is showing you. And it'll give you an excellent idea of whether you are an applicable large employer. At the bottom of this report, we have this row that is labeled Estimate of Full-Time and Equivalents. Now, if these average 50 or more, you are likely to be an ALE. One thing you may be wondering is how the software handles weekly or biweekly pay periods to give you monthly hours. And in these cases, the ACA lets you portion the hours by how much of the pay period falls in each month. Okay, if you determine that you are an ALE, you can start preparing for our ACA solution already. The first step is to do some internal house cleaning, which you can do right now in the employee's record. I'll bring that up. And there are a couple fields which must be entered for the ACA. The first is the Social Security number on the right-hand side. And there's the hire date in the lower left. And if the person is no longer employed, you'll need to enter a termination date. All right, moving on to control information. Once you purchase the software, you'll be able to see and alter ACA settings. So these are things that can change from year to year, depending on changes to the law itself, inflation, or other factors. And this is where you'll go to enter offer of coverage language down at the bottom, or claim your transition relief for the 1094-C. You may notice this other tab next to it for designated government entities. This will not apply to most of you, so we won't talk about it today. All right. Our next step is to talk about ACA groups. Okay, groups allow employers to tailor their income calculation based on those safe harbors and their measurement period methods to their greatest advantage. So you can balance administration requirements versus complete optimization. What the IRS doesn't want is gaming the system. You cannot cherry pick different rules for individual employees. They want consistency. So we will have future webinars where we get into more detail and show you how to get the most out of these settings and from our ACA management software. And now we can create AC records for the employees. So the Generate Employees ACA info is used to expedite the creation of many records at once. You'll obviously have to go into some, if not most of these, to make adjustments. but this does most of the work for you and can save hours. The Enter Employees ACA info screen is the foundation of all the analytical reports you're about to see and will be used to enter records one at a time or update any record as things change. Now we're going to create a new record, and even one at a time you'll be able to see that this isn't going to take very long. And as Paul pulls up. So when we choose an employee, you can see it brings up the basic information. Now, insurance eligible means they're currently classified as full-time. Paul's just checked that. Insurance offered is pretty obvious, but if you're using a graphical form of PBS, we can use this to automatically generate an offer of coverage message as entered in the control information. That was what you just saw a minute ago. On the employee's check stub or direct deposit remittance, and that fulfills your obligation in that regard. This means your HR department doesn't have to send and track offer letters to a number of employees each month, which can obviously become burdensome. Okay, the employee code. This will usually be regular, but there are codes for exempt employees, such as owner, family members, shareholders, and seasonal workers. And we just talked about the groups. Here you can simply choose one or use the lookup. Let's just go with Group A. All right. Now, Joel is a full-time employee, so let's put that in the first of these 4 rows. And Paul is simply going to make an entry in the box for January, press the F1 key, and it will complete all the remaining months. Of course, this can be done one at a time, and you can go back and edit specific months as necessary. These monthly offer of coverage codes are defined by the IRS for use on the 1095-C. And for example, 1H means no offer of coverage. So Paul, why don't we enter 1H for January and then 1B for every other month. Okay, some of these codes carry restrictions for the next array. So you'll see that we're not allowed to enter a dollar amount for January in the next row, which is employee contribution amount. We can enter an amount for February, and the F1 functionality works the same here. Okay. The final row is for IRS-defined codes explaining the coverage above. Paul, let's enter a code of 2C for February and beyond, or January, either way. And there you have it. That's the heart of the ACA maintenance software. Now we can cancel this and move on. Now we get to the maintenance reports. Let me point out that all our reports are available as a CSV, so you can have the added functionality there if you wish to customize anything in Excel. The ALE calculation we don't need to run. It's the fancy version of the monthly labor summary that we showed you earlier, which takes into account exempt employees. This simply determines whether you are subject to the ACA or can ignore it completely. The eligibility and insurance offer report, running that looks for the 2 check boxes in the employee ACA record and prints them out. This is a simple way to verify that you're in compliance, that anyone who's eligible has been offered, and it just gives you a quick snapshot. All right. The initial and standard measurement period reports are also known as the look-back method, and these will be very important if you have employees on that 30-hour-a-week cusp. This is the standard measurement period report. Employers are allowed to take a period of time to measure the work history and average those results to see which side of the threshold an employee falls on. Now, if you see someone has changed from part-time to full-time, you can make sure that you're in compliance by offering them the required coverage. You can also monitor and adjust scheduling before it's too late. This is a critical part of that management aspect. So we can see that Marie has been averaging 130.5 hours per month, and we may want to adjust her schedule up or down. All right, let's go to the Safe Harbor comparison report. And this one analyzes the 3 safe harbor methods all at once to help you choose the best one. You can see the 3 columns on the right will compare those annual levels of contribution amount. Okay, Paul, if we can run the insurance report, please, with the CSV. Okay, this shows you the breakdown of employee and employer contributions toward the insurance premiums. It will even help you settle on a required contribution percentage to keep coverage affordable for everyone and avoid those IRS penalties. And as you can see, you've got both the CSV and the PDF printouts here. Yeah. All right. And then we have the 1094 and 1095 reports. These use pre-printed forms that aren't relevant for an online demonstration, but we will pull the 1095C PDF back up again for another look now that you have a bit more background. And you'll see how lines 14, 15, and 16 mirror the entries in the employee ACA record. We can bring up the employee ACA record as well and compare those. So those are a direct population for the 1095C. Okay, I'll just make a quick mention that all companies or aggregated ALE groups must file these forms electronically, which the software does. And there is also a plain paper or draft version, if you will, of the 1095C that employers can distribute to their employees to confirm that the information is correct. And you'll be able to run these before have to submit them to the IRS. Okay, in a moment we'll take questions, but first I want to thank John, Robin, and Paul. This webinar has been recorded for hours of future entertainment, so check out the PBS website for more resources, including the links that we have down at the bottom of this. And we'll also be producing future webinars with more specific content, and Robin will be able to get you signed up for those.